the pound fell against the dollar, and I think currently is running around 1.21 against it, and it is just dropping. And why? Because the government's 10 and 30-year gilts have reached or hit the roof, let's put it that way. It's because the government borrowing costs, and Rachel Reeves just found out that she is going to have to pay an extra 9 billion in interest on her borrowing. So obviously she's got a massive spending budget, 40 billion that she's going to be spending over and above last year in her new mini budget, which was announced. 25 billion of which she's raising through national insurances, but there's also a lot of other additional borrowing she does through government gilts. And those are the ones that are freaking out the gilt investors. And because she is obviously trying to borrow more money through these gilts, the investors are raising the interest rate. So basically they're asking for more money, more interest on their money. Therefore, they are showing a lack of confidence. There is stagflation in the economy, stagnant growth, and higher inflation costs. Products and services are all going up. Businesses are looking to recover their costs or higher national insurance spending, and the minimum wage salary increases through higher product and service costs. So guys, the UK economy is in a right mess. But obviously Rachel Reeves decides to go off to Canada, or rather China, instead. Well, what could we as property developers and investors do? I think now is the time to maybe just sort of take a deep breath and look at where the opportunities are, and possibly even look at doing an analysis of exactly where you are. I mean, for me, in my portfolio, I'm actually looking at what I can sell without having to undersell it or look at fire selling it. But if you are having leasehold properties in your portfolio, it could be a good time to sell. It could be a good time to sell anything that is not cash flowing very well. So to look at your yields and see what stock you can get rid of, because realistically, maybe now is the time to get your monies together, because I think the cost of borrowing potentially could be going up as well as a result of the low confidence in the UK government, and interest rates were widely predicted to go down, but there is an off chance that they might go up. Because the swap rates are also on a slight upward trend as well. So guys, not looking great on the borrowing side of things, which always is an indicator where the housing market goes. Last year we did quite well despite of all the negativity in the market. This year, I think some of the experts, Adam Lawrence mentioned, he's looking at around 3.75% growth by the end of 2025. So there could be some slow growth in the months to come. However, the key thing here for us as property investors and developers is to look at how we can grow the portfolio, how we can grow our cash flow. And growing your cash flow doesn't just always happen by buying more properties. It could always happen by deleveraging as well. So if you're selling off something and reducing your debt, that would increase your cash flow as well. So now's the time, I think, to take stock. Definitely look at how you can restructure your portfolio to optimize it and streamline it. We'll be doing some follow-up posts on what are the good strategies in this year, the pros and cons of each and every one of them, and why should you be doing those. So guys, stay tuned for those details. But in the meantime, do take stock of where you are and find out what your options are for 2025. Also look at our website, teamtardens.co.uk. We are going to be showcasing two amazing speakers on the 13th of February. David Fitter, who's done many student projects, but he's also done a very successful purpose-built student accommodation scheme, PBSA, using ICF construction. And he will be telling us and sharing his success story and his plans for the future. And then Glenn Keeley, who is working with as an ICF supplier and is looking to help you build sustainable projects, sustainable houses at pretty much no higher cost than the traditional build. But in the same time, you're probably going to look at getting A and B EPCs, which will then also help the end users to get better mortgages And I know Lloyds Bank for sure are doing one where they don't charge any arrangement fee for A or B EPC properties. So guys, there's lots of incentives like that, and you should be keeping your eyes peeled and definitely keeping yourself educated at all times, because it's definitely certainly a very, very fast moving market right now. So do check out our website, teamtat.co.uk, for the next event.